Hi, this is Stephen here from Share Navigator, and this is your daily futures and options trade update. So, you're looking at our existing position on the SPY short $640 put option for November the 21st. So, we had a bit of a sell off in the market yesterday. So, the profits that we made were reduced slightly. We were up about 375 yesterday. You can see on the right hand side our profit is still very, very good. It's 300. So again, just want to reiterate for people who might be new what this right hand side means here. So the market value, you can see it's minus 199.58. We've sold a put option, so we don't actually own that put option. That's why the market value is negative. It doesn't mean that you're down 199 or anything like that. It just means that there's $199 of value left in that put option. And because we've sold a put option, so we've a short position, it's a negative value for us because we don't own it. You can see here our position is minus one contract. The average price is the price we took in when we originally put on the trade. So we took in $499. As you can see, if we sold an insurance contract or a put option, we took in 499 originally and it's only worth 199 now. That's why we're up nearly $300 because we could essentially buy ourselves out of this contract now for only 199 after receiving in 499. And just remember what happens. The transaction when you sell a put option is that the cash straight away goes into your cash account. So you will see straight away your cash balance increase, but that's offset by the negative market value on the short put option at that moment in time. And then what you're hoping for is the value of that put option to decrease, which has happened here, which is great for us. And that's why we're up $300. So you can see just above that, it's saying our total potential return out of all of this $500, we've made 60% of it. Now, yesterday said we were going to close that down during the day, but the market sell-off kind of was decent enough. And I think, with $200 of value left in this, and the fact that if you scroll down here, you can see here that we've a 96% probability of profit from here. So for that reason, and the fact that theta now is growing at a much faster rate, so you can see here every day this option position here is losing $18.60 in theta value. So if every day to expiry, all things being equal, if SPY stays roughly the same or doesn't drop too much, we're going to generate an extra $19 a day in theta decay. So I'm not going to sell this. I'm not going to close this position now. And I think you need to pay attention as to what we are going to do. We're going to open up a new contract. I'm hoping this sell-off kind of intensifies. So we're going to have two positions open at the same time, which means that we just have to have a watchful eye on this and be ready to manage it if, let's say, the market starts to fall very, very quickly. So just looking into that, I'm going to talk about managing this position first of all, and then second of all, I'm going to talk about, well, what's the new position we're going to look at opening up. So we go into the option change for SPY, and this is my favorite trade at this moment in time, and I'm not going to spend too long on crude oil and gold. I'm going to show you why we were right to wait on those two. So this is the trades we're probably going to do today at some stage. So again, this is our existing one. We know it would cost us at the moment around $200 to buy ourselves back out of this particular trade. Sorry, that's the November the 21st one we're looking at. So you can see here, it's about $200 to buy ourselves out of our existing 640 contract, okay? Now, what we would then look at, if that came under pressure, I'm automatically looking at now, where could I roll that to, for example, if the share price of SPY started to fall? And remember, our trigger for taking action on this is if the share price fell to 646. At the moment, that's 675. It's unlikely we're going to have to take any action, but you still have to have a risk management plan, okay? So let's look at our risk management plan on this. And all I'm looking for now in the December 19th expiry is what strike would I be able to roll this down to if things did start falling south on us? And you can see here, I could roll it all the way down here to the $590 strike for December. So that's the reason why I'm happy to keep our existing position with SPY. So our existing position expires in 2 weeks' time, and it's at the 640 strike. And I know now that if I had to take evasive action at this moment in time, I could extend the time frame for a month, and then roll the strike down to 590, which means that our break even is well below 600. So if the S&P 500 is trading below 600, I want to buy it there anyway. So that's the reason why I'm happy to leave the trade on for now. Now, what I will say just in final, just on this position, if this unrealized P&L starts getting back up to 370, 400 in the next few days, then I will take that trade off. So I'm not going to let it run all the way to expiry. I just want to see this total return number here get up to around 75, 80%, and then I'll take the trade off. Okay, so that's the management of trade number one. Now we're looking at opening up a new SPY trade for December. So this is a totally separate trade, and I want you to consider it as such, okay? And I'm going to talk a bit about margin here now in a second. But again, I'm just looking at the strikes, what strikes we can pick. So you can see the IV rank is still very low. It's bent up from 12 yesterday up to 17. So the premiums still aren't brilliant, by the way. So it's not an ideal time to be doing this strategy. But my belief is that this market might correct, but we're talking about a 4 or 5% correction in my view. And then we attack the highs again going into the end of the year. So with that in mind, yesterday I said it wouldn't surprise me if the 640 strike traded up to 600. Look where we are, 600. I'd probably, because we've got one outstanding, I'd probably err on the side of caution, maybe look at the 630 strike or somewhere around there. And I can see I'm getting in $500 roughly on that particular trade. So that's the one I'm looking at now, is the 630 short put for the December 19th expiry. Whether I place that today or not, it depends on how the market. If we get another down day today, for example, if the market's down a half, I certainly will put it on because that premium will shoot up again. And again, just very quickly working out how the premium works. If implied volatility goes up 1%, we know we're going to get an extra 56 cents a share here on our option premium. And then I can also see, just from the point of view of delta, there's got 16.7 deltas there. So if the share price of SPY falls, for example, another $3, which is a 0.5%, then there's another 50 cents onto the value of it. So I think we could probably get close to $550, maybe $600 on this later today, if the market does indeed sell off a little bit longer. So that's the one I'm watching, and that's the one I'm likely to place. Okay. So just finally, I've no interest at this moment in trading gold. Yesterday I said, folks, I just don't like what we're getting paid for selling the put options out of the money. And you can see we've started this series of lower lows again. I don't know if you can see, just in the last 4 days, this series of lower lows has started again. And even today's low is lower. So even though the price of gold is up today, we were lower at one stage. So I would much prefer to see, do we get a retest of this little low here that occurred on the 28th of October? And if that doesn't hold, then we hold off. So we've been right to hold off in our trading gold so far. I much prefer putting the risk on SPY because I think it's more predictable, in my opinion. And it's something similar here for crude oil. What I love about crude oil is the premiums you're getting in. You're getting huge premiums here. But again, a lovely consolidation here. We're liking this consolidation, this grouping that's starting to happen. But again, yesterday, we just felt that, it's still hovering around this series of lower highs, and we'd much rather see clarification that this is actually over. And we haven't got it yet. It's close to being over, but we haven't got it yet. So my fear, again, just to remind you, is if we start getting this little bit of a down sequence here, then that could be problematic. And what I want to do is wait for that to happen and then sell my puts, because we could sell the $50 puts, take in $500 a contract and have a high probability. So we're just being patient there. I'd rather take the risk on SPY, as I outlined earlier on. Okay, if you have any questions, folks, please reach out. Go to the website or chat with us live via the website, or you can go via WhatsApp, whichever suits you best. Okay, thanks and bye for now.